The best way to think about Bitcoin is it's the world's first example of a technology that allows individuals or corporations to tightly bind economic energy to their person. Like if you have 100 families and they all have some money, but they don't trust each other, they don't trust their bank, they don't trust their government, they don't trust any company, but they want to keep their money. So they come up with the idea of a digital bank. You write it in software, and the digital bank has 21 million coins, and anybody can buy any amount of the coins in the bank, and that becomes their bank in cyberspace. Now, the question is, who runs the software? Well, I might trust you, but I won't trust your great-great-granddaughter. So we all run the software. Everybody runs the software, and then the software continually cross-checks everybody else. And so it's a very elegant, decentralized way to create a property network or a decentralized banking network. It's a protocol for economic prosperity, right? So it's like you speak English, I speak English, we can communicate. You use Arabic numerals, I use Arabic numerals. We could do math together. When you offer me nine bananas, I know what 9 is, right? Because we both use the same numbers in the same language. Well, what if we want to trade together and we don't want to rely upon any government or any bank, and we want to do it for 1,000 years? So Bitcoin represents that breakthrough. It's the first time in human history that an individual can own anything without asking the permission of someone more powerful than them. If you have 1,000 Bitcoin and you have the private key, nobody can take it away from you. You can carry it with you. You can send it anywhere on earth. You can take it with you to the grave. You solved the problem that the pharaohs in Egypt couldn't solve. How do you take your money with you, right? So that's a big idea. Let's just call it a bank in cyberspace where you put your money and no one can steal it. And it's currency in the sense that there's never going to be more than 21 million. So when you buy a Bitcoin, you're buying 1/21 millionth of all the money in the world forever. That's the idea. What do we call that? I call it the world's reserve capital network, right? It is capital. What is capital? Long-term store of value. You're a rich person. Where do you save your money for the next 100 years? Not in a currency. You don't buy pesos, you don't buy euros, you don't buy the US dollar, you don't buy the yen. If you're a rich person and you want to save your money for 100 years, you're buying equity, private equity, public equity. Maybe you're buying scarce desirable art. Maybe you're buying real estate, commercial real estate. So the capital assets of the 20th century were like the S&P 500 index or New York or London real estate, or maybe sports teams if you're lucky enough to be able to buy one. But what Bitcoin represents is digital capital. Right? If I have a bank and it's a network, a bank, I can move the money. I can move $1 billion from here to Tokyo in a few minutes. So then that way it's a network. But it's also capital itself. If I gave you $10 million and I dropped you in the middle of Africa, and I said, buy anything you want, buy any equity, buy any land, buy anything, buy any bond, buy anything, but you got to keep it for 30 years in Africa. Or I said, or you could buy $10 million of Bitcoin, and by the way, you can send it to Singapore or London or Paris or New York in 2 minutes from your phone. I would submit to you, there's not a single thing you would buy in Africa. There isn't the capital asset that you want to give to your family or your great-grandchildren. The same is true if you actually talk to people in China. They don't want to keep their money in China. There's a law against removing it from China. In Russia, in Ukraine. If you talk to Europeans, they don't want to have their money locked down in any country in Europe, right? They want to have their money. Where do people want their money? They want it in the U.S., right? How about Brazilians, Argentinians, Venezuelans? Most of the world doesn't want to take all of their family's wealth and store it locally in real estate, local stocks, local currency, local banks. That's why there are laws against them removing the money. And the problem with gold is if you have all your money in gold in Africa, you can't take it through the airport. You can't take your, if you have all your money in gold in Argentina, you can't bring it out of the country. So the value of Bitcoin is it's digital gold. So if you have your family's assets in Bitcoin, you can take it anywhere you want. No one can stop you from removing it from the jurisdiction. And the more insecure you are about the country you live in, the bank you do business with, the nation state you rely on, or your economic future, the more desirable it becomes. So, in a nutshell, Bitcoin represents property rights for the human race. It represents economic prosperity, and we'll call it colloquial digital gold, but it's 100 times better than gold. You cannot teleport gold from here to Tokyo with the blink of an eye, right? And if you have gold, I can shoot you and take your gold. If you have Bitcoin, I can kill you, but I don't get the Bitcoin. And so it is a state change difference in the economic vitality of an individual, a company, a family, a nation state, the human race. And so that's why all of us in the crypto community, we really we revere Satoshi, and we think about the world before Satoshi and after Satoshi, because before Satoshi, everything you owned was subject to the permission of someone more powerful than you. And after Satoshi, after January 3rd, 2009, you could own something for yourself that no one can take away from you, and that is what's caused the entire 750 million person crypto movement.
You are really a pioneer in what you do with regards to Bitcoin treasuries. I mean, how many companies are out there now doing what you do, and do you welcome that?
Yeah, in August of 2020, we were the first public company to make any meaningful commitment to crypto assets or to Bitcoin specifically. And we bought $250 million worth of Bitcoin in August. And then we followed up with another $175 million a few weeks later. We were the first, then came Block, then came Tesla, then came half a dozen or a dozen other Bitcoin miners. And by about a year ago, there were maybe 60 companies that owned Bitcoin, and then it doubled, and now I think there's probably 180 companies that own some amount of Bitcoin on their balance sheet that are publicly traded. We're 10x larger than the next largest one in terms of holding, so we're the 800-pound gorilla in the space. I think probably 1.1 million Bitcoin are held by public companies, and we own about 2/3 of it. So we're the largest player. We're the first ones to actually issue digital credit instruments like these preferreds that are trading in the public market. But I expect that others will follow. There'll probably be about half a dozen companies over the next 12 months to 24 months that will follow and issue those kind of credit instruments. We welcome those companies. I mean, the truth is every single company that capitalizes on Bitcoin takes more supply. There's only 21 million Bitcoin ever. So, if Microsoft turned around tomorrow and bought $100 billion of Bitcoin, that would be great for us, right? So the more companies that buy Bitcoin, the better. Most are just capitalizing on it. They're just buying it in lieu of holding treasuries or holding cash, right? It's like a company can own real estate, a company can own any other asset, a company can own Bitcoin. So most do that. There'll be a few pure play treasury companies that will also issue digital credit against their underlying Bitcoin, but you need to have, more like $10 billion of capital before you can get to critical mass where you could do 500 million and billion-dollar IPOs of credit instruments that would be liquid in the market.
And you just talked about, how much Bitcoin you have, $75 billion. Just talk to us about how much that actually represents and what's your end game here? Well,
we own about 640,000 Bitcoin, and that's about 3.1% of the network. 3.1% of all the Bitcoin that will ever exist, we have acquired. Most of that we've acquired with equity capital, about $50 billion plus of common equity, about $6 billion worth of preferred equity. And so the company is substantially equity, and our primary business line is to issue this credit instrument, and every year we sell a bit more equity and we sell a bit more preferred equity and we buy more Bitcoin. So like this week we bought like 390 Bitcoin. Every week we'll acquire a bit more, and we just continue to grind up. And as we do that, Bitcoin becomes more scarce. And because we're buying so much of it, that means the price over time has to appreciate because all the natural sellers get taken out of the market and no one wants to sell unless you raise the price for it.
Right, so what is the best way to understand what you do and how?
Well, it all starts with Bitcoin, a digital commodity. Bitcoin is digital gold. It turns out that it's also a global asset. It trades 24/7, 365. You can sell it short with 20x leverage on a Sunday morning, and then you can reverse and go long 40x a few hours later from Singapore, cross-trading with someone in Europe. And that makes it very volatile but very desirable, and for a conventional investor, makes it a little bit scary. The history of Bitcoin for the past 5 years is it's been appreciating about 50 to 55% a year, and it's been about 50 vol, so 3 times as volatile as the S&P index. If what you wanted was 50% ARR and 50 vol, then you would just buy the raw commodity. But it turns out that if you walk down the street and you ask people, would you like to generate 50% returns a year, but you might wake up and lose 25% of your capital in 1 week? Most people don't want that. So they don't like the volatility. What our company does is we buy Bitcoin and then we issue credit instruments against Bitcoin. So for example, some people would like to have 75% of the upside, 5% of the downside, and an 8% dividend while they wait. That's a convertible preferred, and that's what Strike, STRK, is. It's most of the upside of Bitcoin, very little downside. It's like 6-7 times over collateralized, and it's a dividend. Other people, they don't want that. They just want, for example, 10% dividends forever. I don't care about anything more than that, but if you pay me 10% dividends forever, that's interesting. So we just take an asset that's very volatile that we expect Bitcoin to go up 30% a year for the next 20 years. Mm-hmm. We expect it to go up more than 20% forever. So it's not a problem for us to give 10% dividends because that's our business model. But for the investor would like to see that we're 5x or 10x over collateralized, right? So for every $10 billion of Bitcoin we own, we might sell $1 billion of that credit with that $100 million a year dividend stream. And so you're the credit investor, you're just getting that pure yield. And from our point of view, we're paying 10 and we're getting back 20 or 30, right? So it makes sense for us. And then, there are other flavors, like we've created this product, Stretch, STRC, which is a treasury credit instrument. The idea of that is it's just a high yield bank account. Like we'll give you a bank account, or we'll give you a money market type instrument that pays 10% yield, and the idea is for it to be a 1 month duration, so we strip all the volatility away. We target $100 par value. You take cash that you don't need for 6 months, but you want to earn 10% instead of earning 4%, and you buy that instrument. Now, you don't want the upside of Bitcoin. You don't want to buy, a lot of people don't want a 20-year bond. What they want is they want a money market, right? And so you don't want infinite interest rate duration, you don't want delta, you don't want volatility, just give me pure yield. That's probably the most refined digital credit instrument. So what our company's doing is we have a lot of capital. We have about $70 to $75 billion worth of Bitcoin on any given day. We sell those credit instruments, and we have about $6 billion of those credit instruments outstanding. They're so way over collateralized. Then we generate various types of dividend streams or upside with them. As it turns out, we expect Bitcoin to appreciate 30% a year, but we don't pay more than 10% to 12% dividend streams. So our common stock shareholders get the excess. So what happens is we take that volatility and performance of Bitcoin and we strip the volatility, the risk, and the performance off, and we sell you 10%, 12%, 8% as a credit investor. And then the extra performance and volatility goes to the equity. So MSTR, which is our common stock, is more volatile, higher performance than Bitcoin. And what you have is some people want more Bitcoin performance and they want to be on a roller coaster and they buy the common stock. And some people want less and they just want the pure dividend stream And of course, the people that just love Bitcoin and they don't want any counterparty risk, they don't want to own a security, they just buy the commodity Bitcoin. And so that's how we sit in this ecosystem.